Hello everyone, this is Rahul Jakaria from Sharekhan. Welcome back to exciting 3R actionable stock updates. 3R basically means right sector, right quality and right valuation. These are our investment ideas. Today we have an update on Hindustan Aeronautics Ltd. Our analyst maintains a positive view on HAL with a revised price target of Rs 5,211 because of a healthy order book of Rs 94,000 crore and a manufacturing pipeline extending till 2032. Government's focus on defense spending and the long runway for growth makes it an attractive bet. The stock trades at 36 times its FY26 earnings estimate. Next, we have an update on Zydus Wellness. Our analysts recently upgraded rating on Zydus Wellness from hold to buy with a revised price target of Rs 1,968. On account of improved growth visibility and attractive valuation at 29 times its FY25 and 23 times its FY26 estimated EPS respectively. Zydus Wellness posted a good performance in Q4 with revenue growing by 10%, volume growth of 5.5% and operating profit growing by 12.2% year-on-year. Operating profit margin improved by 45 bps year-on-year to 20.7%. Management has guided for double-digit revenue growth with the personal care segment expected to grow in strong double digits and steady recovery in the foods and nutrition segment. Consolidated operating profit margin has bottomed out at 13.3% in FY24. Management expects operating profit margin to improve to 17 to 18% over the next 2 years on account of stable raw material prices, cost efficiencies and better operating leverage. Last week, our Radico Khaitan. Our analyst maintains buy rating on Radico Khaitan with a revised price target of Rs 1900. Radico Khaitan's Q4 number missed expectation on all fronts with revenue and PAT growing by 29.7% and 52.5% year-on-year respectively. Operating profit margin at 11.4% missed expectation of 12.6%. Volume growth in prestige and above moderated to 14.5% in Q4 versus 20% growth for past 3 quarters due to state-specific issues. Company has maintained guidance of 15 to 18% volume growth in the P&A segment in FY25. The management expects the effect of raw material volatility to have bottomed out and expects operating profit margin to be in mid-teens in FY25 and further rise to 16 to 17% by FY26. The stock is currently trading at 54 times FY25 and 42 times FY26 estimated earnings.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.